Good morning, everybody. It's the morning Forex briefing for Monday, August 18. Hope you all had a great weekend. We're ready to get to work this morning on looking at the short side of the dollar again. A little house cleaning I want to get to just before we get to work. I want to remind everybody that today is the last day that we're going to be using the Omnovia software. When you guys come back tomorrow morning, you'll have a different piece of software. Now, the login credentials are identical. All you have to do is the same process to log in. Additionally, the new site launches on Tuesday, and that means also you'll have a new look to it. Since you'll have a new look, you might have any questions about logging in and all the rest. Shouldn't have any problem with it because it's identical. When you sign in, you're going to be redirected right to the home page. And the home page has got the same stuff on that FX Official does. It'll say the same stuff. The only difference is it'll have a new look and a new feel to it. Shouldn't have any problem logging in. If you do, then you want to send me an email real quick or on DeskView because you guys all have all that already. I don't believe you'll have any problems, so I'm not even concerned about it. But again, if you do, just let me know. Additionally, let's see what else we're going to have. Yeah, that's it. New member area launches tomorrow, and then we're also going to have a new web broadcast software. Okay, let me go ahead and get right to work here, guys. I'm going to move this right to here. Dollar overnight mixed, range bound. We opened New York quiet, range bound ahead of or after a relatively quiet start in Asia last night. No real economic news was released, and that's giving the greenback the opportunity and potential to trade on mostly technical factors. Now that the panic buying of dollar has largely subsided from late last week, traders are holding the majors in a consolidative pattern to start the week. Basically, the dollar has begun to move sideways. Volumes were lower, and due to the fact that there was not a lot of news out there, the markets have basically just settled into some two-way trade between support and resistance. Normally seen on the bid for euros during the sharp sell-off recently, major Swiss names were seen on the offer overnight around the 146.50 area, traders say. High prints in that rate, 47.69 in Asia trade. U.S. investment houses seen on the bid this time, most likely covering recent shorts. Traders note cross-spreading for non-dollar pairs, pressuring euro as well. Normally following euro lower, but firming today. Cable has held last week's low so far with a low print at 86.24, and the toolbox is flashing an exponential buy this morning. In other words, it's coming on and going off, coming on and going off. The exponential buy in pounds right now, I think, is 86.80 or lower. So aggressive traders can buy pounds at the 86.80 area or better during the day. Tuesday will likely be a big day both for euro and pounds due to the fundamentals being released, making this Monday today kind of a heavy setup day. Now, fundamentals that's being released, just so you know, on Tuesday we have German PPI, German ZEW economic sentiment, and then in dollars we have PPI, core PPI, housing starts, and one of the building permits, and then one of the Fed members speaking. So there could be a big day on Tuesday for euros and pounds. You want to be a buyer of both euro and pounds today. In fact, the number we want to be long euro at's right here, 46.80 to 4700, and anything under 86.80 is your buy in pounds, I think. You want to just put those trades on and let them work again. With the heavy selling pressure in both pairs recently, a short squeeze is overdue. So in my view, getting a position on today ahead of potentially negative news for the dollar with corresponding positive news from overseas, I think that makes for a good probability of higher euro and higher pound pricing by midweek. Dollar yen, that's lower, making lows under the 110 even handle in Asia overnight. Bids seen from U.S. name, traders say, as well as importers. That rate's currently holding inside range on light volumes. That's one thing about overnight action today, guys, is that volumes have been on the light side. That's suggesting, I think, the rate is still seeing a potential for a top here under the 110.50 area. Currently trading 110.30 in dollar yen. Uh, Most of the volumes is in dollar yen anyway. Most of the volume has come from non-dollar pair cross spreading. So there's been a lot of whipsaw in two-way action in all these dollar pairs, and I think really the key here is to be patient and wait for the rallies to fail. So it's okay to hold shorts, I think, through the day in dollar yen. My biggest fear in dollar yen, though, overnight was that we were going to get a gap and run open, tag our stop, and then fall back. In fact, we got the opposite. It opened lower, ran lower, and then rallied and can't not get through this area of 110.30 to 50. That could mean we have a top forming in dollar yen. So we're short from 110, pardon me, 109.80. We added at 109.50 on that break and got head faked on it, but I think we're okay. So you want to just go ahead and let it work. Dollar Canadian, open lower, dropped to a low print, 105.42. That, if holding shorts, you would have been adding to that position on a break at the 105.60 area. So if you're holding that order from last week, 105.60, you should be short at 105.60 and 106.80 now. Currently a bit higher on the day, around the 106 handle, 106 handle. Traders note a lot of technical trade is keeping that rate two-way to start New York. So in my view, dollar CAD, you're going to get a whipsaw there. You're going to get up and bidding that offers back and forth all day. A lot of whipsaw. If you look at the shorter time frames, though, it's definitely just ebbing and flowing in that range. There's really nothing to be too concerned about. You should have been adding to that position, though, looking to hold more short dollar CAD positions. After taking losses this month so far, I think the sucker rally in the dollar appears to be finally faltering, and I think that's putting us in a position to recover those losses during the second half of the month. So look for the dollar to weaken during the week, but still, guys, still put your stops on open positions because the volatility has really increased, and whipsaw is a big major concern. You know, we could see the market rally 50, 80, 100 points one way and break 200 points in a couple of hours and settle unchanged on the day. You know, I mean, that's the kind of volatility that might happen in the next couple of days. So if you've got open positions on, it's best to don't touch the stops. But whatever you do, don't trade without them. Make sure they're in there and let them work. Let those positions work. Maybe just close your eyes and come back Friday, you know. Today's data, nothing really on the board. It's really weak, light for news from overseas as well. Today we have, I think it's National Association of Home Builders, NAHB, Housing Market Index. That's a private piece of news. Don't expect any volatility at 1 p.m. today. Looking ahead to tomorrow, we got PPI and core PPI, housing starts and building permits. So this will be more important for U.S. traders. And then, of course, with German data coming out, it's going to be really volatile in the euro. Now, I think we're looking at a short covering rally brewing. So just keep your powder dry and get ready to go. If you bought them this morning, just let them work. A couple of quick notes here, and then we'll get the trade setups. Sterling tracked the early drop in euro, easing the lows at 86.18, added by UK negative press reports and data before reversing. Currently, we're 86.56. Rate recovered to 87.20 as rate tracked euro strong recovery, allowing euro sterling to correct. U.S. investment house supply emerged at 87.15, and that weight was taking the rate through support at 86.80. So that market may have seen some pressure from the top end, but those shorts will need to cover. Don't forget, cable getting a lift with traders noting decent demand emerging. Rate is at 86.85 is where the demand's coming in. Major U.S. investment house, a noted seller from the teens, 87 teens. Cable seen meeting willing sellers above the 87 handle, so that's the big number right now, 87. You want to be a buyer under 86.80. So if you're buying, you can buy right here, as long as you're long in here somewhere. Your number is 87. You want to see that market get above 87 with some authority today. Euro, major German name cited for providing downside pressure at about the 46.85 area. Some said triggering an option barrier at 46.50. Rate pushed below that level before basing at 46.45, recovering. Upside momentum gained pace as Japanese bought euro yen. Demand emerged from major New York bank. The buys taking the rate above 47. European dealing opened with euro dealer trading just off the best levels of the day, but rate unable to make further upside. Lift off the lows, so to be seen participating by sovereign names, with further bids still in place at 46.90 to 95 area. So this big brief push, this right here under 47, sovereigns are buying down here. Corrective pullback extending the lows at 46.94. Demand at 46.90. Swiss private bank, a noted seller in recent trade, though most of the supply soaked up by major U.S. names, one trader said. Rates at 47.52. So the Swiss private bank forced that rate down under 47. And I think we're going to see stops in here soon during the day today, too. Yen, traders reporting a macro account selling dollars in early Asian trade, taking the rate back under 110. Low was constrained to 109.97. Japanese demand for euro yen, then kicking in together with oil company demand for dollar yen, forcing the rate back to 110.38. That's where we're at right now. European dealing saw little movement there. Traders note this week expiry interest, significant expiry interest on options, 110 even to 110.50. So that we may bounce around in there for a little bit. Bank of Japan starts the two-day policy board meeting today. Don't expect a rate change. They're just going to talk and talk and talk. Low is contained by Japanese demand for euro yen. We talked about that. On the downside, a break of the overnight low, which is 109.97, would expose stops from CTA type accounts through 109.85. MNI text then noting short-term support at 109.28. That's really critical, guys, is that if those stops are triggered in dollar yen, the 109.80 area, notice that we got short right in there, but the CTA type guys got short or got long above here. That's why their stops are at that number. That's what I mean by, you've seen me say on some of these trade setups that something is changing at a particular price. Well, there's a clue. You know, certain types of momentum and macro accounts are on the buy side up here near the highs with their stops at the same level, that number that we've seen trade both sides of the market before. So I just think that's critical to remember, is that what you're looking for is the quality of stops that are in there, and those are protective stops, which means that's what you want to be short against. You want to be the guy selling into those. You want to be the guy that those stops are what's going to drive your trade. You want to be short ahead of those stops. You follow me? Dollar yen bids back at 110. CTA stops through 109.85. We got that. Dollar Canada reported offers around 106.10, able to cap the European rally. Base overnight at 105.70. Asian range from 105.46. A break and clear above 106.10 to open a move towards 106.30. I don't think we're going to get that today. Bids are at 105.40 to 30. Stronger at 105.20. So the stops are going to be under 105.20. So we're about a handle away from where the big stops are going to be in dollar CAD right now. We're currently trading 105.90, 106 to handle. Okay, let's get the trade setups. Bottom line though, dollar's off to a slow start for the week. Ain't really nothing going on, guys. Wish there was, but there ain't. It's all technical trade. We're seeing the market stay within existing ranges, maybe holding its own a little better. Some of the major pairs holding a little better off the lows seen on Friday, which was maybe the last hurrah on the panic side. The last 2 to 3 weeks of dollar buying, the pressure is starting to subside on that. And it looks like we're about done on that panic move. That move in the dollar, I think, was way overdone. I don't think that was really a realistic move at all, and I don't think it reflects the underlying fundamentals in the market at this point. I think it may have been euphoria or basically speculation. So now that that particular part of the market quality may have fully expressed itself, a short covering rally in the majors is due, and I think we're ready to go ahead and take some of that our side of the equation. So let's go ahead and get right to setups and potentials. And before we do that, though, I want to just see if we have any comments or questions, new listeners maybe. Nope, looks like all regulars. And no comments or questions as of yet. Guys, feel free, drop it in. I'm going to go ahead and turn off the ticker. We don't need that for right now. And let's take a look at today's quote. Today's quote is from Cicero. You guys know who he is, right? Remember studying your ancient history, Greek and Roman history? Cicero said this. He said, "A mind without instruction can no more bear fruit than can a field, however fertile, without cultivation." You know, certain things work and certain things are designed to work a certain way. You know, if you want to grow a crop, you got to go out there and plant seeds. But if that's all you did, your crop isn't going to really grow. You know, you got to get rid of the weeds, you got to cultivate it out so you don't have too many plants in one area. I mean, you got to do some work. The natural process of growing stuff, it works without your help. You don't have to do anything. You just simply plant the seeds, water the seeds, and it starts to do its own thing. Now all you got to do is kind of help it along. And if you don't do that, you're not going to get your best results. In fact, you may not get any results. Trading, same thing. It works on its own. You don't need to help it at all. You know, trades do what they're going to do. Markets do what they're going to do. They don't need your help. All you got to do is participate with them, move along with them in the right type of manner. And in order to do that, you got to get educated. Problem is, we get lazy with our education because it is work, right? But you have to do that. Otherwise, you'll never get the full benefit of your trading strengths and weaknesses. The education that you're looking for is not more knowledge. The education you're looking for, the instruction, the mind with instruction, the instruction you're looking for, is additional discipline. You want to learn what discipline increases your trading strengths and what discipline reduces your trading weaknesses. If you would do those things and learn those things and discipline yourself, that's the instruction you need to have. You're cultivating your market field. That's really all you have to do. The market's going to do what it's going to do without your, help at all. And that's similar to just when you plant something, it grows without anybody's help. It just does its thing, you know. Uh, my personal experience has shown me that I make the most money when I'm most disciplined, and I lose the least when I'm most disciplined. And between the two, that's where my results come from. The minute I break my discipline, that's when the results start to go off the wall. And I know when that is now because I keep very accurate records and I know when I'm doing right things and when I'm not doing right things. So I want to encourage you, take time, be the kind of trader, be the kind of mind that accepts instruction. And know in advance that the type of instruction you're looking for is better quality discipline to expose your trading strengths and minimize your trading weaknesses, because everybody's got them. Everybody's got strengths and weaknesses. You need to understand what they are, be okay with them, and then move on to greater levels of discipline with them, and you'll find in the long run you're getting much better rates of return. Okay, that being said, here's our active trades. We're short dollar yen, 109.80. We added that last week, 109.50. So we're holding an average right in the neighborhood of about, I want to say 109.75, I think, or 109, we're 30 points apart here. 109.65 is our short from, so we're holding a little bit of heat there. We're short dollar CAD, 106.80. That's working nicely. We added to that overnight because we were stopped in at 105.60. So this number actually is 818.08. That's when you want to put that in, but that order's been working for a few days. And we want to buy pounds, 186.80 or better. You can get them anytime now. And you would have just gotten in on your euro position, 147 or better. Now, I always like to tell you this about my trade setups and potentials, guys. Bottom line on trade setups and potentials, this is my point of view. I'm not telling you what to do. I'm not saying you have to do these trades or you should do these trades. I'm saying this is food for thought for you. If this fits with your developing trade approach and you feel strongly that this is in agreement with where you're trying to go with your trades this week, then this might be a good confirming indicator for you. And maybe if you want to be on the buy side, like I've got better entry points, or sell side, I've got better entry points. That's good. That's all this is for. It's not designed that you take these trades and put them in your account. Just mirror these trades in your account. Then you're not thinking maybe. You want to learn to develop the art of thinking. And I just personally, as my point of view, is where I think something's changing and it might be an opportunity on the buy side or the sell side. So use them as you feel best. Additionally, I always like to remind people that I have a tendency to be, about 24 hours early. So, I wanted to buy the pounds and euro last week on Friday. So I waited till Monday. And as it turns out, that may have been the right thing to do. So, but again, I might be 24 hours early again. We may get another sell-off, stopped out, and then who knows. So, but in any case, those are the numbers for today and the setups for today. Let's go ahead and get to charts. Move that down here to there. Move this to here. And let's go ahead and take a look. We're going to start with euro. Uh-oh, how come my chart's not advancing? Oh, guys, don't do this to me. Come on now. There we go. Let's put up a projector. Okay. Can you guys see this? Let me know when you've got it. You got it okay? Good. All right, we're just limited in, and the market is recovering right back after that little brief sell-off down there. Currently trading 147, 147.02. So in my view, guys, you bought it just right, 147. Let it work. It may bounce around a little bit in here, and that's fine. The one problem we're going to have with this particular chart, because you want to just let it work. It looks like we're bottoming here. Here's the problem. As you can see this, there's a mistick, and I can't fix it. I've loaded this chart 3 or 4 different times, used different, numbers, different, you know, contract, variables, and it's still coming up with this. It's almost useless chart today. So we got to skip the hourly dollar euro chart for the day. I'm going to get a call into these guys at Genesis. They usually get a whole bunch of people screaming when this happens, so we have to skip it there. But the important issue is our volume. Notice that our volume is down. If you look over here and look at when the market made its low on that low volume, the market bounced out of the hole on that low volume. In other words, that high volume down bar was followed by a reversal bar. So that much we know just by looking at volume. So I think it's important to note that the market may have had a selling climax there. Here's pounds. Pounds has got an exponential reversal coming in right now on today's action, and you need to be a buyer, I think. I think that that exponential bid right here, this exponential buy, this may be our right off our bottom here. I want you to notice that back here on Wednesday, low print, Thursday, low print, right at that 106.20 area, and then we had the Friday, flush through the stops. Market came all the way back and closed in the same general area. See that we're right within the same 30, 40 points in the closing basis. In other words, the close back on Wednesday the 13th, close was 86.89. We're currently in that area right now, right? Within 20, 30 points of that. We've been above that already. So, I mean, what's important, I think, is not this low price, but all these opens and closes are so close together. In fact, they're right in here. See, this is right in there. See that? They're all right about in there somewhere. That little green line there. Now it's the little green line is a little lower. I mean, it's not. They're not all right across flat at the same price. They're right in that general area. You with me? I think that's kind of important. The exponential reversal coming on today. All we need is a close up near the high of the day, or even make a new high on the day. That would be ideal. I think we should get somewhere above the 87 handle by the end of the day. I think that would be ideal in this pair. Let's take a look at futures. Okay, what might be a good confirming signal here on this exponential buy on the daily is that right about the same time we're getting sell signals coming on the hourly. Volume has been really light here starting the day, but we are holding above the hourly moving average here. And notice that this 50 bar is flat. We're holding above it and it's flat. If we continue to move at this rate, we're going to have it cross the 100 bar moving average. What you want to see now is the 100 bar moving average come down, the price cross the moving average, and then have an uptick in volume. Have an up bar that crosses the 100-hour, and then a big uptick in higher volume. That would indicate that that bottom's starting to form. Let's take a look at dollar yen. Okay, come on, dollar yen. I hate having dead air time, guys. I really do. Well, maybe I'll turn the projector off and see if that'll free up a little RAM here. Come on. Where is it? There we go. And now we got dollar yen up here again. About the only thing to say about today's daily action so far, it's an inside range day, so it's a point of indecision. It's inconclusive. It opened lower. We're running lower. There's nothing to do but wait. If this market will just sit here through the next day or two, the stops will be rolled up underneath in here somewhere, the 106.30 area. That may mean we'll get a flush back down here, and we'll get a test of this low from last week, which is a 108. What was a low price here? 108.36. Yeah. In the past 2 weeks, our range has been really tight. Look at that. Almost nothing going on in that range. This big buy breakout early part of August. This was a little bit of a confirmation bar. We had that big bid wick right here. Confirmation this buying was still active. It came up, came down, went right back on the buy side. Now it's stalling at the top end. So the buyers and the sellers are squaring off somewhere between the 108.20 to 30 area on the downside and somewhere around 110.30 to 110.50 area on the top side. So right in there in the top end, right in here at the bottom end, the resulting range, that's about 200 points. That's the field of play right now. You know what I'm saying? One side or the other is going to gain dominance, and when they do, there'll be a mad rush based on the stops. And this is futures. Thing that's interesting of note, of course, is that as of last week, we're under the 50 bar moving average. Look at how it's just kind of skating right along the rail on that 50 bar. It just keeps coming off the top. The volume is really light, though. I think that's the key, guys, is that when this market decides to rally and it gets above the 50 bar, when that happens, that's when the volume should come way up. So what we're looking for is for futures to extend a rally, continue to move slightly higher, increase in volume, and then take off when they cross the 50 bar, stay above the 50 bar, pressuring the 100-hour. That's what we want to see. That's going to start to move up in this way, stay firm, volume firm, and then as it crosses this, boom, takes off. And here's Swissy. Swissy actually opened better and sold off and had made a move for lows early in the day in Asia under Friday's lows. Then we encountered some buying. So this market is seeing some buy the dip mentality. However, the volume is still really light. We're going to have to redraw some of our lines in here, I think, later today. But the point I'm getting at is that for right now, this market is getting some two-way action here. Bids are coming in underneath. Offers are up still at the top. It hasn't made a new high, so technically it's still an inside range week. If you look at last week's action, we're inside that action for the week. The big players may come to the table on the sell side if this market doesn't extend for a new weekly high by Wednesday. So if it just kind of sells off in here, maybe moves a little bit lower Tuesday, makes an attempt on Wednesday but can't make a new weekly high, that's an important thing. Stop and think about that. If you're trading on a daily chart and the market makes a high and it comes off a little bit, you're long, and it makes another daily high, comes off a little bit, makes another daily high and comes off of it, but then the next day it doesn't make a new high and actually makes a new low and then comes back and closes mid-range. Wouldn't you say, well, maybe this uptrend's starting to come to an end, right? Well, on a weekly chart, it's the same thing. So if that market can't score a weekly high again after making so many of them in a row, good probability that the big swing trader is going to say, well, maybe it's all over. He's going to liquidate his long. You know what I mean? Let's take a look at Swiss franc futures. Okay, where are our futures? There we go. Okay, guys. Overnight to start, just a mild sell signal. However, our X reversals and hook reversals from last week are still valid. This may be in a good time to go long futures or short cash. Notice that as the market's declining, the volume is increasing a little bit. So we get to the highest volume of the day, which actually is below previous day's volume. I mean, there's no volume going on here, but the market is right on support now. And really all it did is come to where it's been before. Okay, come on. There we go. There we go. All it did was test support again. And big question is, are we going to see it move through there? Those reversal figures are still valid. You know, that sell that we had overnight might be late. However, if you're looking at the trend, you know, you're going with a downtrend, you're in good shape because this 100-hour is staying down below there every time. See that? But I think we're getting near bottom, which means a top in dollar Swiss. Let's take a look at dollar CAD, which is the only pair that's lower on the board consistently. But for the day, seen a little bit of whipsaw here. We're 50 off the high. Come on, CAD. There we go. From last week's 5 days, 3 of them were down days. Closes consistently lower on the down days, right? We're opening and closing right at the same price level so far, leaving us a doji star off of support, which is our first fib number, the 105.40 area. What was the low print today? Low print was 47. Let me just double check. 42. So we're talking about technical trade, right? So that's a classic textbook trade right there, actually. However, the jury's not out on the day. What you want to see, if we close right here, what you want to see tomorrow is the entire bar of tomorrow's action, the candle bar, not the wicks, the bar, to be inside today's wick. You want the entire bar to be right in here somewhere, maybe even closing down near the 105.50 area. Because you want to see pressure, selling pressure coming on and staying on for the early part of the week. If we take a look at futures, and for those of you using this as a trading tool on the hourly, you got some pretty qualified signals here recently. Strong buys right off that trend line, and then early overnight exponential reversal. You could have covered your longs from here to there, or you could have gotten short right here for a little bit of a lead. Now this distance here is only about 30 or 40 points. This number here is 46.60. These numbers down here are 46.20. So I mean 40 points. It's one thing I got to remind you guys: if you're using the toolbox on a short time frame, if you're using it on any sort of time frame that's like 1 hour or less, you're not looking for 50, 80, 100 points on a trade. You're looking for 20 or 30, right? And that is something that's really important that you remember because uh, you got to think in terms of scale. And even if you're looking for 20 or 30 points on a trade, you still got to be risking, 30 or 40 or 50 points. I mean, it's not good risk to reward ratios, in my opinion, to be using the toolbox on an hourly basis or less to find the trades that you're going to participate in. The better thing to do is look for the bigger picture to say, we've got price pressure coming against us one way or the other, and then use the shorter time frames to look for conflict. So when you see the conflict, in other words, when you see a sell signal on the hourly and you've got a buy signal on the daily, it's time to buy on the hourly time frame. You see what I'm saying? I know it's a little more confusing, but when we do more toolbox training later this week, I think we're going to do that Wednesday. Um, we'll talk more about that. But bottom line, guys, is notice that we're above the 50 bar. The 50 bar is holding right down the middle of this range. We stay above the 50 bar and make an attempt at the top end. That negates this channel now. And we're looking for a rally back up here, breakout, which would be where the stops are in dollar CAD cash. Okay, guys, that's it. We got a few minutes left. If you want to go ahead and get your week off to a little bit of a start here with a comment or a question. Let me see if we have any. Nope, doesn't look like it. Guys, got something you want to discuss? Feel free. Um, One thing I want to just remind everybody is that starting tomorrow, we've got the new format. The new members area is launching tomorrow, but the login details are identical. All you do, everything will work for you guys at FX Official through the new website. All you got to do is go to your FX Official bookmark, type your stuff in. It'll take you right to the new members area. No worries. You can always sign in through the new members area with the old credentials, from what I understand. And it's your call, you know, if there's any problems with that, it's your call how to do it. But if there's any problems with that, you want to email me or send me something through DeskView. Say, hey, listen, I'm having a problem. You want to still get with the service guys, you know what I'm saying? We'll take care of you one way or the other. But if you have any login issues, let me know through DeskView or through the service ticket guys. I'm also starting the new broadcast software tomorrow, which is actually GoToMeeting. If you're familiar with it, great. Most of you guys probably have seen it before if you're a regular listener or watcher on the web for stuff that's involving webinars in the currency market. So a lot of you guys may be familiar with it. If not, don't worry about it. When you go to the new members area, the login process is identical. All that's going to happen is instead of Novia loading, it's going to be GoToMeeting. And I'll handle it from here with all the other stuff that you need to have seen. It'll all make perfect sense. Don't worry about it. It's identical stuff, guys. From what I've been told, a seamless transition is what we're looking for, and I think we've got it handled. So it should be a seamless thing. In the meantime, for the new members area, we're building out some great stuff that's going to be coming there. And what I want you to do is offer me your feedback on it. Let me know, what you like, what you don't like, things that have to be improved. We have like all my old articles and educational broadcasts and everything. Some of that's being transferred over right away. Some of it's being loaded during the week because we have new listeners coming in. We want to build that relationship. So we're going to add things to that site as we go along, as people get more acclimated and familiar with it. So please send me your feedback and let me know what you like about the new layout of the new members area. Personally, I don't like it or dislike it. I like the one we had. I think FX Official worked pretty well, but then again, I'm not the guy that is trying to find a larger database. I'm the guy that creates the content. What I've been told is that this particular format and the way they're getting out there in front of people on the web, this is going to make it easier for people to join the community that we're building. That I'm all for. So for me, it's just a different look, but it sets up the same thing. You know what I'm saying? So hopefully you guys will like it. If you have any comments or suggestions, I want to hear it though. Okay, guys, any other comments or questions today? I'm looking at the clock. We're about ready to open equities. Nobody's typed anything in yet this morning, so quiet start. I hope you guys are going to take some of these positions though and get ready for the inevitable here in the next few days. This rally's coming, guys, I'm telling you. Where's equities called on the board here? Called to open higher. Good. Okay. That's going to put a little bit of whipsaw in the dollar. Okay, guys, if we don't have any comments or questions for today to start, no worries. we will, I'm sure, over the next little bit. So feel free to shoot me an email or something on desk view if you want, and I'll get right to you. In between now and the next time we talk, guys, don't forget to run your stops. Have a great morning. I'll see you this afternoon at 3:15, God willing. And of course, if there's anything going on I think you need to know about, I'll send it out to you on desk view. Okay, guys, have a great morning. I'll see you this afternoon.